Welcome to the Cash Flow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cash Flow Project. I'm your host, Duke Ong with Tri-City Equity Group. Today we have Josh Ziegelbaum on the show. Josh serves as the Director of Investor Relations at Legacy Group out of Fort Lauderdale, Florida. Prior to joining Legacy Group, he was the VP of Business Development for Life and Forward Capital, a PE firm. Before that, he was a private banker for Wells Fargo, focusing on credit and investments in public securities. He's known for his passion around building deep relationships with his clients and acting in their best interests. Josh, welcome to the show.
Duke, thanks for having me on the show. It's great to be here with you.
All right, so what does Legacy Group do? And can you tell me more about your team?
Sure. I'm happy to dive into that. So we're an alternative asset manager. We focus on investment opportunities that produce high social and environmental impact in Latin America, more specifically in Colombia. Our flagship portfolio company is Green Coffee Company. It's the number one largest coffee producer in the country of Colombia. And we have a goal of making it the largest Arabica producer globally in the next few years. And yeah, we open up our investments to accredited investors. I'm the Director of Investor Relations out of Fort Lauderdale. The two partners who I work with are in Medellin, Colombia, where they handle the day-to-day of our portfolio companies. And that is what we do.
What is considered an alternative investment and why is this becoming more popular?
Yeah, so alternative investments would be anything that's outside of your scope of a traditional portfolio. So think stocks, bonds, cash, traditional investment products, mutual funds, ETFs. Those are all traditional investment products. So alternatives would be things like private companies that have not gone public yet. In the case of Green Coffee Company, maybe it's a syndicated real estate project, like a multifamily offering. Maybe it's something else of that nature that just is not along the scope of like traditional product that you could buy in a standard brokerage account. That's kind of what we consider alternative investments. And it's important because of the high level of correlation that we're seeing in public markets. Everything's moving in tandem, it seems. Usually investors would or advisors would recommend investors to have a 60-40 portfolio, meaning 60% stocks and 40% bonds, because they don't move along with one another. They're uncorrelated. But what we've seen lately is that this massive rise in interest rates that have pushed bond prices down simultaneously while equities are also going down. So investors don't know where to go in these cases that have a typical traditional portfolio. So they're increasingly turning to alternative investments. We've seen a big increase in that post-COVID. It's just really taken off. Investors that want more control of their wealth and how it grows, more predictable transactions. So that's alternative investments and why investors have become interested.
Got it. So the Green Coffee Company, I don't know much about the coffee industry. So can you tell us more about that?
Sure. So it's a company that we started from the ground up. It was founded in 2017 by Cole Shepard, one of the partners at Legacy Group. And it was birthed as almost an alternative to cash flowing real estate initially, where we would acquire land holdings that produce cash flow through agriculture and spit off cash flow to investors. Pretty simple kind of idea at first. We realized quickly that we weren't thinking large enough, and the company has grown over several funding rounds to be the largest producer in Colombia of Arabica coffee. We have over 6,700 acres of land holdings, over 7 million coffee trees, and we control farming and production at scale in the heart of Colombia, in the state of Antioquia. It's where we're currently operating. So we essentially buy up land holdings from maybe smaller landholding families or people who have had property for generations. We were consolidating, we're building up infrastructure meaning the processing facilities where we take a coffee from its cherry form down to what we know as a coffee bean today. And we kind of are right there in that market where we're doing wholesale B2B unroasted green coffee, hence the name Green Coffee Company. As we look towards the future and our growth plans, we want to continue to acquire more assets in Colombia, but we also want to build out a roasting vertical. So we're targeting Florida or Texas as potential markets to acquire or build out a US-based roaster. So we take this green coffee and go further down the value chain, make more margin, and unlock more value for investors. We are also looking at monetizing the waste from coffee production. So 80% of the coffee cherry is garbage essentially. And then the bean is only a small component of it. So we're doing experimentation and research into how we can monetize that. And we're considering and strongly believe that we can do ethanol and vodka and other spirits from the byproducts of coffee production. So those are really the three pillars that we're focusing on as we look towards a 2026 exit. Our goal is to continue to roll up assets and build value as a private company and position the company for either sale or an IPO in the US markets. We're targeting 2026 for that.
Got it. So how does that look like for the investor side, like as far as splits and returns and that kind of thing?
Sure. So great question, Duke. So we issue common equity in a US-based parent or a US holding company. So investors get direct access to farmland, to an early stage innovative business, to emerging markets, all through a comfortable US structure. So we, as well as our investors, invest here in the US. There's operating subsidiaries below that own the farmland and the rights to the cash flows that are all directly owned by our investor base. We have just over 300 investors across 4 funding rounds. We're in our 4th round now, which is our Series C. We've just initiated the Series C round about a month ago, as of the time of this recording. From an investor perspective, we have a $100,000 minimum investment. We're forecasting an IRR north of 60% annualized, 64% in our investor presentation, and a net equity multiple of 11x on invested capital through a 2026 exit. So in simpler terms, on a $100,000 minimum investment, we're forecasting approximately a $1.1 million return on for investors through 2026. Now, that is based on a set of assumptions based on where we expect revenue and profitability to be in 2026. And we kind of backed into a historical valuation of 20 times earnings of the S&P 500 and applied that to where we expect to be in 2026. We believe that that's very conservative because a growth company usually trades much higher at 20 times earnings. That's for like the stable, like blue chip stocks that you'd find in the S&P. So we think there's even more upside potential beyond what we're forecasting, but that's what it looks like from an investor perspective on what we expect here on a Series C investment.
Got it. So would investors receive ongoing distributions, or is it like mainly waiting for the IPO exit and the large capital at the end?
Definitely has more of a hockey stick return profile, more of a growth-oriented investment. We believe the most value will be unlocked at an exit transaction, whether that's a sale or an IPO. It's quite possible that we'll issue dividends prior to that. If we did, it would be on an annual basis. They would be declared in the year after the operating year once we close the books for the company, and we would pay a distribution from the US-based parent. While the company is set up as an LLC, it's taxed as a C Corp. So it would just be 1099s in the event of a dividend or in the event of a sale. But definitely the bulk of the return is expected to be achieved at IPO or sale.
I see. What other companies does Legacy Group own?
So we have an investment in a tech company in Medellin called Polygonus. They do 3D art and design, e-learning. They create digital productions for Latin American Netflix shows, for video games. There's an academy that they have that they teach people how to program and do this. It's a really exciting company with a lot of growth potential. We made a seed investment in them a number of years ago. They're based in Medellin, not far from where we're based at the Green Coffee Company. So that's really the two main companies right now. Green Coffee Company being the only one that we've opened for outside investment. But we are constantly looking for innovative companies that we could either start from the ground up, like we did with Green Coffee Company, or invest in founders that we believe in, like we did with Polygonus. And I'm sure that we'll have more in the pipeline for investors in terms of opportunities. But as of right now, Green Coffee Company is the focus. We're very much laser focused on delivering results here and dedicate the majority of our time to it.
So would an investor invest in Green Coffee Company or Legacy?
Great question, Duke. They would invest in Green Coffee Company holdings. So they would be a direct shareholder in that company. Legacy Group, we are the asset manager on behalf of our investors. The two partners at Legacy Group, Cole Shepard and Adam Jason, they sit on the board for the Green Coffee Company, along with the GCC president, Boris Woolner. So we make management decisions on behalf of our investors. We raise capital. We drive forward various initiatives, whether that be the byproducts, the roasting, appointing senior management. So Legacy Group is very much an asset manager. The investment would be in Green Coffee Company.
I see. What is impact investing and why is that important?
So impact investing is, you're going to get a different answer from different people depending on who you ask. I'll give you in my opinion, it's investments that produce high social and environmental impact that really lift up the communities where business is done, that provide value to all stakeholders, whether that's employees, investors, people we touch in the supply chain. Some things that we do around impact on the social level is we provide fair employment and formal employment in a fragmented market that is inherently informal. So the way in which coffee is traditionally produced in Colombia is in a very informal manner. People are paid cash, no benefits. There's very little protections and assurances. We employ over 400 full-time employees. We pay into pensions, health insurance. We pay into bank accounts, help people build credit. Really doing a lot to lift up the community, and you see it when you're on the ground there. So adding value to not only your investors, but those within the company's ecosystem. On the environmental side, we have a solar project that we're working on one of our facilities so that we could energize the entire processing facility from solar energy. We are reducing waste, reducing water, pesticides. We monitor conditions on the farms with advanced technology so that we could reduce those things such as waste and pesticides. So doing these types of things and actually doing them at the core of the business is what we believe impact investing to be. There's a lot of greenwashing or people that are saying they're doing impact and maybe their core business is selling oil, for example, and then they'll donate a percentage of profits to a certain cause, or they'll kind of like do something impact related on the other side. We believe it should really be at the core of the actual business itself, not just a secondary or tertiary initiative of the business. So impact investing, in our opinion, is when it's really done at every level of the business from start to finish, and it's thought about in every management decision.
Got it. So tell me more about your role as Director of Investor Relations. What do you do for the company?
So I primarily handle all communications with our 300 plus investor base, whether that's our quarterly updates, our ongoing newsletter, accepting commitments, handling investor questions, preparing marketing materials, driving forward business development initiatives, unlocking ways in which we could strategically find more investors or more value on behalf of the firm. But essentially, it's helping the business meet its capital goals. So the team sets forth a vision and a mission, and I help us achieve that along with our investors by raising the needed capital and making sure the investors have clear form of communication between here in the US, where we are, and where the investments are primarily being deployed in Colombia.
So I also handle investor relations for our group. What advice do you have for attracting new investors or retaining current ones?
I think being transparent and honest in all facets of your business will lead to multiples on that effort. So, treating people the way you want to be treated, answering questions in a timely manner, being transparent, being available. I see other firms where maybe it takes a few days for people to answer. I mean, we really try and answer within minutes or hours for investor requests. Continuing to add value for them by providing content so they can visualize their investment and get excited around it. I see certain private placements where maybe investors invest, every quarter they get an update, and it's relatively quiet in between then. So what we like to do is like really weekly communications through our email newsletter, whether it's blog posts that we've written, articles that we're in, podcasts that we're featured on, such as this. Maybe it's videos and footage from the farms, news on acquisitions in between the updates. So being like information heavy, value add, so investors could really wrap their head around the opportunity and see things in real time. In private markets, I mean, things move slower in certain instances. Maybe there's less clarity because of just the nature of the business. So I think just really taking all the things that are going on in your business and really communicating to them in a professional manner, making yourself available, those are the main things. And then, of course, tapping into new networks. So you'll have to continuously find ways in which you could identify new investors. For us, we do accredited investors only in a 506c offering. So investors need to either have $1 million or more net worth or meet certain income requirements. So where are those investors? That's a whole other piece of it, right? It's one thing to treat investors the right way and give them value add content, but without any investors to talk to, it's kind of you're in a bit of a conundrum. So you need to constantly be thinking of ways like where you can meet new people, present. We've had success with certain mastermind groups or meetups and things of that nature. It's constant business development, constant flow of getting in new people. And if you do things the right way by your investors, they will refer you new business. So that's a whole, and that applies in any business, of course, but very much so in private markets.
Couldn't agree more. So you were mentioning the weekly newsletter and value add content. So does your team handle all that and then they just ship it to you and then you kind of polish it and then send it out to investors? Or how does that work?
We have a pretty tight team at Legacy Group. So we have 2 partners, myself, Director of Investor Relations, and then we have 2 VPs and 1 associate. And the VPs and the associate are not in the investor relations department. They're in capital raising, business development, and investment banking. So it's a pretty light team on investor relations. I collaborate with everyone on the team to craft the newsletters. So often we'll take a theme or an idea that we talk about in a board meeting or on a Legacy Group team meeting, and then we'll build out a content calendar. It's a collaborative approach, so it's not handed to me and then I just edit it and publish it. Often I will draft the newsletter, share it with the team. We do a round of edits, maybe some comments, and we tweak it and make sure it makes sense. In other cases, maybe one of the partners will write a newsletter and then we'll do the same, but we do it as such. I'll generally craft it up, program it into the CRM, liaison with our content team in Colombia. So we have guys that go out to the farms, take footage, and really create videos to the themes that we want. So we communicate to them what we want to see. Once we get that, we get it out to our investors through these newsletters. And but yeah, I generally head that initiative up at the company.
Okay. You mentioned 506c. Do you do paid ads or any kind of top of the funnel stuff?
We've experimented with some paid ads in the past. With limited. I don't want to say it wasn't successful because we get more eyes on the deal or on the project, but our bread and butter is the existing ecosystem that's already following us, continuing to curate it. We have over 4,000 people who subscribe to our newsletter and growing. A lot of them refer us business or part of certain groups that allow us to present. That's where we've seen the most success. I've received a couple investors off of paid ads. We're looking at potential podcast ads on really kind of top tier shows. So it's something we have explored and we've experimented with, and we're continuing to do so. But it hasn't been our holy grail, I would say, in terms of raising capital.
I see. All right, let's transition to our fire round. What is the best book that you recommend?
Man, let's see. Rich Dad, Poor Dad, classic one there. Great mindset book for anyone at any stage of their life, I think.
What about other than Rich Dad, Poor Dad?
Other than Rich Dad, Poor Dad, Atomic Habits is a good one. I like that. How to Win Friends and Influence People. Those are a few that I like.
All right. And what's your superpower?
What is my superpower? Reading the room, and reading emotions. I think emotional intelligence is my superpower.
It's definitely useful for investor relations.
I'd say so, yes.
What is the biggest lesson that you've learned over your career?
Let's see. That's a tough one, Duke. Knowledge is power. Without understanding the product or the service in detail, believing in it, you're going to be hard pressed to succeed. So I've kind of figured this out in my career in banking and now in private markets, that you really need to understand the product and or the service, and or else you won't be able to communicate it effectively with your clients. And you also need to use your product or service, and in this case, invest in your own product. So that's a big lesson I've learned.
For the busy working professional working towards financial freedom, what advice do you have?
Own your own home for sure. As for starters, for those who don't, you need a place to live anyway, and no one could predict the ups and downs of the market. But I firmly believe that homeownership is an escalator to wealth building, especially for people who are just starting out. Diversify. So we're all told, oh, invest in your 401k, max it out, call it a day. I would look to other ideas beyond that, whether it's keeping the home that you own and buying another one instead of doing the typical of like, oh, sell and upgrade type of thing. So there's different strategies that I would encourage people to look into beyond just investing into their 401k as a busy professional. So whether that's real estate, alternative investments such as syndications and things like that, kind of look outside of your typical traditional portfolio and standard advice. And you'll notice the most people that you come across that are high net worth or wealthy, they're either entrepreneurs, business owners, or investors. So trying to look around you and see who the successful people are, pick their brain, ask them what they're doing. And if they don't tell you, try and emulate what you see that they're doing.
All right. So how can our audience get in touch with you?
You could find us online at our website at legacy-group.co. You could also send us an email at investor.relations@legacy-group.co. We'd love to get in touch with you.
Perfect. Well, thank you so much for being on the show.
Thanks, Duke. You have a great day.
All right.